close. There we go. If you're listening, hit the thumbs up. Waiting for me. Why is it waiting for me? 12:16. Let's see. We're going to close this down. I'm having YouTube Live problems. Bum, 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 bum. There we are. We're live. Hit that thumbs up button. I think it was my iPad Pro that was the problem. I'm going to move that over there. Let's see. And then we're not going to do that now. We're going to move to our scanner. And we're going to pick up daily stock picks. And we're going to do the core investments. And where's my notes? I'm going to move these all the way over here. There we go. Listen, Hung, it was a long night of sleep, let's just say. I had such good sleep last night, back in my own bed. Well, not my own bed, but my parents' house. And not a hotel bed with 51 early 20 girls who get up early in the morning and make a ruckus in the hallway. Let's just put it that way. I got to add a KOLD is way up. Okay, nothing in daily stock picks. Let's see about the sectors. Nothing crossed up in the sectors. I don't think I'm going to get any cross-ups, by the way. Let's look at brokerage holdings. Morning, Dawson. Yeah, I think a lot of people waited for me, by the way, Hung. But let's see. Brokerage. We're going to go back down to, let's look if anything from ARC actually passed up. Ooh. Archer Aviation. There ain't no way I'm getting you guys into Archer Aviation. Hey, Hung. Thank you so much. I wish a lot more people would. I think I only have like 120. And it says my average listening. I was looking at average listening. I'm not getting it into L3 Harris Technologies, even though you got this gap up here. Nah, it's not worth the risk. Let me see. LHX. They're making money, but it's expensive. It's aerospace and defense. This is the drone company, I think. No. On a Friday, man, what am I thinking? There ain't no way I'm getting anybody into that one. I'm going to look at REI for you guys as well. To make sure we look at REI. Costco, SPG, Qualcomm. It's going to be a long one today, by the way. ARC Holdings. There probably is no Dow stock unless Verizon crossed up. Let me look at Verizon. Verizon was the only one that was really up yesterday. Boy, that 200-day is moving towards there pretty quickly. If they don't have good earnings, they're going to get screwed. That's the Dow 30. Let's look at the NASDAQ 100, which there ain't no way anything crossed up in the NASDAQ 100. I don't think there was any stock that was positive in the NASDAQ 100 yesterday at all. Yeah, I was late just because I slept. I think I woke up at 5 o'clock. I turned on CNBC, did a little bit of research, and then felt a little bit better, like I'm back in the market. Morning, Chris. Yeah, happy Friday. Thank freaking God. I got to put together my hours for Miss America, and FYI, I'll announce it. Let's see. Miss Wisconsin, Grace Stanky won. Great family. Loved that family. They were awesome. I was rooting for Miss Hawaii. I was really rooting for Miss Hawaii. Miss Hawaii's family was the best. They brought me water when I told them I had to walk a long way for water. They brought me a lei, live, straight from Hawaii, by the way. Energy. Ooh, we had a lot of energy cross-ups yesterday. But nothing of value. That MMLP, it's kind of like my MPLX, just a little different. There's no way I'm putting you in that one. That one has no confirmation. Mexico. It's not Mexico. Mexico. This is Travel Centers, which crosses up almost every day. ARLP. HNRG. Okay. That's good for scans. Let's go back to the strategy tester. And I want to look at REI. Just because I think there's quite a few people in REI. I don't know what it did yesterday. It looks like it. Let's look at REI and Active Trader Pro. I think I have Boyle up in Active Trader Pro. No, I have Delta Airlines. Which... Let's look at Boyle. Bum, 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 bum. Boyle yesterday had a run in the middle of the day, by the way. I don't know if anybody traded Boyle yesterday. But what a run. Holy cow. Okay, I'm just going to get started. I think I'm going to get started here. Hey, since you guys are early, any you guys want me to include anything? I'll give you guys a couple minutes because I know that YouTube Live is a little bit behind. But if you want me to include anything, hit it up. Hit it up. Let me know if you want me to look at any particular stock. I'm about to start the podcast. And I'm not super late hung. I usually get on here, I'd say between 8 and 8:30. And it's only 8:30 now. So, AMD. I own AMD. Full disclosure, hung. I own it. And at a much higher price. AMD goes with, I'll talk about AMD and I'll talk about SOX. SOX and XOL. SOXX, I should say. Man, I really should put this on something. Hold on one second. I'm going to get a pad so it's not on the... God, I wish we had a freaking... Let me get this pad in. Put a foam pad under here. Probably isn't great for the heat exchange, but it'll be better for the... Okay. Oh. I miss my desk. Let's just say that I miss my desk. Let's see, that probably should be a little bit better. I'll bring up AMD. Oh, Meta. Yeah. Cooper, I'll do that. Hey, Cooper, how's my sound? Okay. Let me start this up now. I got a lot to go over, by the way. So it's going to be a long one today. Okay, I'm going to hit record. Good morning. It's Friday, December 16th, and strap your seatbelt on. I got a lot to get over. As Frank Costanza says about Festivus, I got a lot of problems with you people during the airing of grievances for Festivus, but I got a lot of stocks to go over. So today will be kind of more a normal, if you will, back to normal. I'm back in New Jersey. I had a good morning sleep. So let's start with SPY because that's going to tell us. I think I said it yesterday. I think you've got more room down. I said if we closed below 390 on SPY, I thought that you would get it would be a bad signal that we were going back down to fill those gaps. And we closed at 389.63. So that tells me that we're probably going to cover this gap. And let's zoom in here. It's not, the gap is at 385, but you lost your 200 day. So when you lose that 200 day, most likely these gaps come into play. And there's two gaps, and it's between 385 and 378. And there's a gap down here, and that's between 364 and 361. Doesn't 100% mean that we're going down there, but you can take a look. That 9-day, the 21-day, it's well, the price is well below. So you've got your Bollinger Bands here still pretty wide open, which indicates that we're probably in a sinking phase where it's got to cinch up a little bit, kind of like it did here. So you're probably going to trade a little bit flat. With the size of the move this week, with the size of the move in the futures, I would expect something of a little bit of a rally, either later today or Monday. Doesn't mean that you buy and hold over the weekend any of your triple levered ETFs, unless you're nutso, like a couple of you people have said that you've done. But those triple levered ETFs, they move really quick. And you've got bad news kind of coming out of Europe, kind of coming out of China. The world is heading into a recession. And I don't think that there's any doubt about it. The only question is, will the U.S. be a big recession or will it be a small recession? It's my personal opinion. But we got a lot of stocks to go over, so let me get into it. I'm going to start with Corey. He found 4 undervalued stocks. The first one is SIGA, S-I-G-A. And let's go over. And this is, by the way, a week coming. So they've even gotten weaker since he brought this one up. SIGA Technologies, let me see what they do. I don't even know what they do. They are biotech. They're making money. So it's making 5.39 on the PE. Year to date, they're up 7.55. They are 71% below their 52-week high of 28. They're 38%. So they're kind of in the middle, more on the low end side. And you can see the chart here on FinViz. As far as the algorithm goes, you'd be out. You would not be in. It doesn't have confirmation. I would wait for that confirmation, but I tend to agree with you that it's beaten up. I would do a little bit more research than I have. There's no analyst recommendations here, but do a little bit more research into some of these articles as to why it's down, what the future of this holds. But the algorithm, it performs, it makes you 57% over 1,000 candles. Buying and holding only makes you 3%. You have 26 positions. You win 50% of the time, and your average win is 11%. I think this is a great trade. Trading stock, I should say. The next one he wanted me to go over was INMD InMode. This one, ironic, ascending triangle. That's a good sign. I mean, look at how it's kind of using that 200-day as its support level at 33. It's trading right now at 36. The algorithm has you in at 37, but it's kind of lost its way with the market. The RSI is at 48. The MACD is not necessarily moving in, but let's look at INMD InMode here. They've got a PE of 17, so it's a little bit expensive, not super expensive. Performance year to date, you're down 48%, so it's with everything else that's kind of expensive. It's just way down. It's 50% off its 52-week high of 73. Chart doesn't look horrible. Looks like it's kind of moved back up towards where it was in March. But as far as the algorithm goes, it makes you 47% versus buying and holding makes you 54%. And it's got 26 positions. You win 38% of the time. Your average win is 16%. So it's not a bad trading stock. I think if we're ranking these, so far Siga's our winner. HBD is one that he brought up too. Let me see, HBD. Is it HB? Yeah, he's got an HBD, but I don't see it. I think that's a cryptocurrency. But the other one, the last one, I'll look up. I'll ask him what HBD was. Maybe it's HDB. But BTU, Peabody Energy. This is coal. And Tom from Twitter has been begging me to invest in coal. I mean, probably, 2-3 tweets a day asking me about coal. This one's an interesting one because right now it has you out. It just got you out with a 20% gain. The algorithm on this one, and this is kind of crazy, but the algorithm makes you 278%. If you just bought and held 500 trading days ago, which is 1,000 candles, you would have made 1,224%. The algorithm gets you in 27 positions. You win 44% of the time. Your average win is 28%. Your latest win is 20%. It got you in down here around 24, and it got you out around 30. Right now, it looks like the MACD might cross up. Let's take a look at, and I told when he sent me this one, I said, I know BTU. That's a good one. This is coal. And if you have any environmentalist in you that is against coal, just stay away. I probably would not be super happy to make money off of this because it means that the world is going down in flames as far as climate change, and it's going to burn. But coal is a reality. The reality of energy right now is we need more energy than we can actually make. So the analyst right now, June was the latest analyst upgrade. Jefferies went from hold to buy from $25 price target to a $36 price target. You're trading at $29. So if you get to that 36, that's a 20% move. So I don't think it's out of the realm of possibility. You are only 12% below your 52-week high of 33, so you're going to have some type of catalyst to get it there. February 8th is the earnings, so I don't see a catalyst necessarily moving, but I do see a strong MACD cross up, and I do see some candles that have confirmation. And so you're using this 200-day. If it were me trading this one, and I very well may trade this one because I trust Tom, I trust Corey. I think this one's a good one because I mean, just look, if you use your stop losses correctly, and you just say, hey, I'm going to take a 5% loss and basically stop if it goes down 5%. You don't have the cross up, but you can assume the cross up. I wouldn't buy it on a Friday. Maybe wait till Monday. It's 2 candles, but I like it. I like that one. So Corey, I think out of the three that I looked up, Seaga's not a bad candidate just because it's trading stock. I don't know that necessarily worth an investment. But BTU, I wouldn't mind holding that one. Not long term, not like forever, but 3 to 6 months. If you're down 5, 6, 7%, I think within 3 to 6 months, you make a nice 10, 15% profit on that one. So let me look at, Nick from Instagram wants me to look at Momo. Hold on one second. Gotta let the dogs out. Oh, man. Oh. And morning, James. Sorry about that. Let me put my headphones back on. And I don't know if my volume's down or what, but I sound super low, but I think it's the volume. And the dogs are going nuts. I don't know. Can you guys hear that? My parents woke up. By the way, if you're listening, hit the thumbs up button. I'm going to go back. He wants me to look at Momo. Up 36% so far, but well below the 2018 highs. Let me see. Momo. Let's look at Momo. And sorry, the dogs are going nuts in the background. Momo is Hello Group. I don't even know this one. Wow. Great chart. And I'm glad I held on to this one and didn't look at it for you, Nick, because hopefully you've held on to this one because they just had their earnings and you probably have almost doubled your money if you did get into this one. But Momo, December 1st, the algorithm got you in $5.61. Look at that. It's up at $8.36 right now. It's a great move. Let me look at what the hell Momo does. Hello Group. I want to say, what's that? That woman. The Hello. Her name. Hello. It's not making money. Doesn't have a PE, but it's got a low forward PE. So maybe they just announced that they turned profitable. Year to date, they are up 5%. They're 13% off their 52-week high of $9.69. So it's probably got some room to go. There's a Motley Fool article, Why It Soared, on December 8th. You can read that one. Price target from Morgan Stanley on the 9th got upgraded from equal weight to overweight, $5 to $9 price target. The algorithm, it loses you 18% versus buying and holding loses you 40%. So, 29 positions within 1,000 candles. You win 31% of the time. Your average win is 11%. So I don't know that this is necessarily a great investment. If you're holding it, you've still got confirmation above that 9-day. So I'd wait until it gets below that 9-day. And if you have TrendSpider, you can get my algorithm and you can look at the candles where it goes below the 9-day. If you don't have my algorithm, just hit me up on Instagram and I'll look at it for you for every day if you want me to. But I would probably stay in this one. The problem you're going to have is it will come back down to this gap. It gapped up from $5.33 to $5.89. I do believe that it will at some point come back to that gap. So taking profits might be a good idea. So there's that one. Shout out to Jackie, meet Kevin. Let's look at ADP. I think I looked at ADP yesterday on the YouTube Live, but I did not look at it on the podcast because of the technical difficulties. So ADP, it's an automatic. This is basically a payroll. And in fact, last night I helped a friend who started with a new company who is doing her 401k, and her 401k is actually with ADP. So it's interesting. You've had an absolute crash in this one in the last couple of days. So, oh, sorry. I had to stop the podcast because the door opened up. I'm waiting for the dogs to settle. Because if I don't wait, you're gonna hear a lot of crying. Sorry, door opened up, and I'm sure you guys can hear all the creaks and crawls, but can't wait to get back to Atlanta. Let's just say that. It's more fun when I do it there. But yeah, ADP crashed down to 248. This is probably just because the market is going there. You've probably got it going down to 243. I believe I said it on YouTube Live, but I did not say it on the podcast yesterday, and my apologies. But you had the 9-day crossing on the 21-day. It lost some of its gain. If you're in this for long term, I don't think you have a problem. I think you're just coming back down here to the 200-day at 244. If you were in on the trade, 232 was your buy-in when it hit the 200-day. Used it as support. You just got out with an 11% gain. Not too bad. So I like ADP, and if you want to hold that one long term, I don't think it's a problem. They do so much on payroll that you're really not going to worry about that. So I think UBS Grunt on Instagram told me not to worry about this one, but I am going to look at it anyway. He says, good morning. If you get a chance, let's look at COHR. Let me type this in before I read the rest of the note. And he did his homework on this one, but I think he told me later not to worry about it. I noticed BlackRock increased their position by 40%. I do realize it's very expensive on a PE basis, but a lot of growth and stocks don't make money. I think when I looked at their earnings forecast, they were to grow 70%. They have a very interesting business. And he wants me to have a safe trip back to Jersey. I had a safe trip back to Jersey. Let's look at this one. COHR. Let me put it in here. What do they do? They are technology, science, and technology. PE's 88. So it's, yeah, I'd say it's expensive. The Monkeys, kind of the average price target is about 45 to 50. It's trading at 34. Develops, manufactures, and markets engineered materials, optoelectronics, components, and devices. It operates 2 segments, compound semiconductors and photonic solutions. If you want to know what that is, look it up on your own time. I'm not going to go that far deep. I'm just going to look at the fundamentals. You are 53% off your 52-week high, 18% off your 52-week low. You are down 50% year to date. It looks like the earnings per share this year are down 36%. Next year, they're expected to grow 22%. I would take this one as a trade, but the chart looks just too messy. Right now, until it decides that it wants to break that 200-day, I wouldn't get into this one. The chart's just too messy. It's up, it's down. There's better out there. In fact, the BTU is a better play in my mind. That one's making money. It's above the 200-day. You're going to get a good dividend on that one. I'd say stay away from this one. News out. Let's go into some news. Netflix. Their ad-supported tier is not doing as well as expected. And that's kind of the news that came out. Got you out of this one with a loss. The algorithm got you in at 303. I say anything below 300, I think you're okay on this one. And the reason I say you're okay on this one is if you go back here. Now, the problem we have is that this entire gap is, the gap is huge. It's enormous. And we're going to shrink that in so we can see it. But it goes up here to 345. And I think at some point you get that 345 with Netflix. If you're waiting for it to get confirmation, there is the 200-day at 257. You're trading right now at 290. With us going down today, I wouldn't buy this one today. I would wait for a MACD cross-up. The RSI is down at 40. It will probably happen either later today or Monday that you'll probably get some type of cross-up on this one. The chart is super messy. But I think this one, you get in and wait for it to hit that 348. It is super expensive. This is the Mac Daddy of streamers. The PE is 27, but they are expected to grow their revenues, and they don't have to grow a ton of users. All they have to do is crack down on passwords. This is the easiest stock trade I can tell you. I don't own this one. Full disclosure, my dad owns this one. I've told him to stay in it. I've told him not to get out of it. I wanted him to get out of it when it was $400 stock, but he didn't. So I told him, even though you're in it for a loss, just stay in it, because at some point in time it's going to come up there, and he doesn't need the money. So he's like, okay, I'll just stay in it. So it's a personal decision, but yeah, he's down. I think it's coming back to there. It is super expensive, and you can see the gap on the daily here. It's huge, and we haven't hit it yet. So I think this one, again, anything under 300, look for the daily confirmation. But I think you can make this one work for you. One that I do like, it's just still expensive. Iger came back. This Disney I'm talking about. It's had a couple of buy-ins, nothing for profit. Over 1,000 candles, the algorithm loses you 25% on this, but buying and holding has lost you 48%. So the algorithm outperforms, but it still loses you money. So you have to be careful about where you get in. I think anything under 90 on this one, I think you're good. The problem is that they have this Fox deal that they can't necessarily get out of. It's still expensive. The PE is 51. Yeah, the PE is 51 for a Disney. They are going to launch their ad-supported tier on Disney Plus. I would expect that to be a fairly good launch, because, again, Disney, there's going to be advertisers that will want to step in on that one, probably even more than Netflix. So I continue to say I think anything under 90 on this one, I think if you're looking for a long-term buy, I think you're good. They'll grow into those earnings. Make no mistake about it. They will. They will launch some type of gambling with ESPN. They will launch some type of park initiative where they just charge people more money. They've got levers to pull, and Iger's a good leader who will probably pull those levers. The old guy, I forget what his name was, he wasn't great. I mean, he was okay. But a couple of days ago, I did mention to you guys, and I posted it on the Twitter, and I sound like such an old guy. I posted it on Twitter. I wanted to say I posted it on the socials. But DRN, which is triple levered ETF on the real estate market, we had a buy-in here at $11.61. It's lost its way a little bit. It's down to $10.97. Here's what you have to know about the real estate market. With the most recent drop in interest rates, and when I say interest rates, it's mortgage rates in particular. They went from like 6 or 7% down to 5% over a weekend. The real estate, the home builders were saying, hey, we just had an influx of orders. We've got a ton of houses that we're probably selling. And I think it was D.R. Horton or one of the home builders that said that over a weekend they saw a big influx. So DRN might be the play. You're still in this play. Hopefully you maybe got out of this one with maybe a 10% gain, maybe a 5% gain. But I do like this one to get back up to this 200-day at 1263 at some point in time. It's just got that kind of trend line there. The danger that you have to realize is there's a gap down here between 967 and 1007. So play your stop losses pretty tight on this one, because again, I think with interest rates kind of going down, with housing have to be sold, I think you'll see this one move up. But DRV, let's look at DRV, the inverse of this one, which has moved. Yeah, you just got a cross up on DRV. So again, weigh your options. If you've got TrendSpider, you can do a significant amount more analysis than me on that one. UNH was one of the big losers yesterday, United Health. And with healthcare, we want to keep an eye on UNH. It is super expensive. Let me see what the PE is 25. Year to date, you're up 5%. You've got a 1.25% dividend. You are knocking up against 52-week highs. You are only 5% above the 52-week high of 558. And when we look at it, you're at 528. It's kind of lost its way a little bit too. It's using that 200-day as a support level, but with yesterday's candles, it broke through that. So you're in a little bit of a danger zone here. The algorithm has you out, so I'm not suggesting you get in. But since this is in it's a core holding. So if you have TrendSpider, you've got my daily stock pick core holding list. If not, I can send it to you. But that core holding list is UNH is in it. And so I think for a long term, you wait for an entry point. And I think that entry point, we're going to get closer to 500. If we continue down, I think you're going to see it down here around 515 or so. The last trigger that we got was a buy at 529. I would have told you to sell at this 550 point, right at this ascending triangle point, because we just lost it. And you could see that we were losing it. Now, the good news is the Bollinger Bands are syncing up, indicates a move. The RSI is down at 41. The MACD's moving down. We probably have more to go down. But I like that one, and I brought it up. Roblox, since I thought it was going to 40, they released in November, they had a weaker than expected user number. So it went the wrong way. I hope you got out of this one. This is part of dealing with some of these stocks is you just don't know when stuff's going to come out. I think they'll have some gift cards. Again, I think they'll have gift cards. But December 15th at 35, the RSI, the MACD's crossing down. It got you out of this trade. And I can't really read what the loss is, but it's a significant loss. You're trading at 27. I do think at some point you get back to this 200-day at 40 on this one. I think it's just, it is super expensive. This is a company that's not making money. The metaverse takes a lot of capital dollars to actually implement. Year to date, you're down 72%. They're expecting their earnings per share next year to reduce by 11%. So the book value on this one, just so you know, is 71 cents. So, yeah. Got to let the dogs out. Okay. Go on. Okay. Man, between the dogs and my parents. Good Lord, I got to get back to Atlanta. Okay. So Roblox, my apologies for leading you in there, but I do think that this one is probably a buy on the next upswing. And you've just got to take your profits when you can. This is the kind of market that you're in. If you want to make money, you've got to take you've got to identify it. Roblox, it could be a long-term play. You could be in this one long-term. My suggestion, take the profits while you can. I think, we're in that kind of market. I think that the core tech that you're looking at, if you're looking at United Healthcare, if you're looking at Simon Property Group, if you're looking at Qualcomm, if you're looking at some of the chips, if you're looking at Apple, if you're looking at Google, in my mind, I think you do those long term. I don't care what the chart says. The best time to buy stocks is today because tomorrow meaning 5-10 years from now, they should be up. The one caveat I will say is the Nifty 50 of the 70s. Everybody thought the Nifty 50, and Google that. There's no official list, but the Nifty 50 of the 70s, they all thought these companies were going to be around forever. IBM, Kodak, GE, and you just didn't do well in those. But that goes back to the investing philosophy that I say. Buy the stocks that you use. I've got an iPad. I've got my AirPods. I've got my iPhone. I've got my new MacBook Pro. I've got my Apple Watch. I'm invested in the ecosystem. So I'm there. And yeah, Costco. I'm going to look at Costco too, James. I've got that one down. One thing, I was wrong about Boyle yesterday. And for this one, I am going back over to OBS because I want to go to Active Trader Pro. I want to show you Boyle. I was looking at SPY. But here's Boyle. And the trade yesterday was when it lost its support. It had support at the beginning of the day. So if you bought it at the beginning of the day and then you sold it at the right there because it lost its support, you may have made some money, you may have lost some money. It probably was a little bit of a loss. But then when you start to gain support right here again, you should have bought. And see, boom, it goes up. And let's just shrink this down. We'll go 2-day. See? Let me bring this down a little bit. And this is where I'm supposed to. There we go. There it is. So see where this, it's over the 9-day, and then you lost support. But if you got out up here, you had a great run because once it gained support, it was at $36 and you got 10% up there at $39. And so if you're listening on the podcast, it is at minute 40 that this is. And I know also if you look on your phone, there's a transcript that comes out of these lives. So look up Boyle and you'll be able to get just on the transcript. But essentially, this is great. And again, you lost it all today. And so you're back down to 33. KOLD is your play. But I wanted to bring it up that I was wrong about Boyle. You had a trading opportunity in this one. It's huge. And I think KOLD is your play. Let's go back to Active TrendSpider. And we'll look at Boyle here. Because you can see, even though you've lost your confirmation and you're down below, you're down at 33, so you're down here. It's going to gap down, but the algorithm has you in at 38.83. So I still think that you're coming up here to the 200-day at some point in time. You're going to cover this gap here that's around 48. But don't gamble. Don't gamble. Don't gamble with it. You can't. So, what? What?
They're standing at the door crying.
Oh, that's okay.
Can they come in?
Yeah, but they're just going to ask to go out again.
Is that what they're doing? They're going both ways?
Yeah.
All right.
I love when I have to edit this shit. Can you... I feel like I'm 15 and my mom's walking in my room again. Because that's just literally what happened. Fun times. And when I wave her off, she just stands in the doorway. James Apple at 130. Yeah. Yeah. Target, could have taken your profits. I think it's Michelle or somebody that had Target. She got in. Maybe she's watching or listening on YouTube because I think it was on YouTube that she got in. But I'll take a look at Target. I'll add it. Can I say F you, James? Can I say F you? So, full disclosure, what happens is the dogs go outside because they hear people interacting and they want to go out. But I got the door closed so that I'm not interrupted because if I left the door open every 2 seconds. Hey, did you turn on the heat? Hey, it's a little hot in here. Hey, can you run the water? But yeah, and I don't have a problem with the dogs. I have a problem with the parents, but because every interaction needs to have an interaction. Can't just let the dogs in. Yeah. And I hear them crying at the door. I do. Okay. Oh, now I've got to do this. There we go. Okay, where was I? I don't know where I was. Dogs needed to be let in. And if you were listening on YouTube Live, we're at minute 44 on YouTube Live. You can go and listen to the interaction. It'll be fun. Go and listen. But yeah, Boyle. I'd say, again, we're on a Friday. Don't buy Boyle. Trade it all day long. But KOLD did have a cross up here, ironically. No, it didn't. It had a cross down, got you out. But KOLD is today's big play. I was wrong yesterday. I think you had an opportunity in KOLD and Boyle yesterday because of the volatility. And I think you'll have a chance today. My suggestion is do not hold these over the weekend, like I always say. There's an interesting one here. I'm going to bring up Twitter. And Apple, after 2 failed breakout attempts to support the upside, Apple is now approaching trend line support. Here's the chart from TrendSpider. And you can see there's the breakout that it attempted, failed. And now you're looking at this 138 as support. I always say it, anything in the 130s, I think you're good with Apple. Could it go down to the 120s? Absolutely. And the reason it could go down to the 120s is the PE. The PE is 22. That's an expensive stock. And if you've got a recession in China, if you've got a recession in Europe, if you've got a recession in the US, who's paying $1,000 for a freaking phone when you've got all this recession? And the 14 just wasn't a great upgrade. I mean, I was at the Miss America pageant. Everybody was saying that they got the 13. So, and you can't even get the 14. So, till after Christmas. So, I do think that that was one that I broke, that I looked at and I said, TrendSpider hit it right on the head. And by the way, that is you can look at that for free. That's not even setting it up. Here's the 2023 low right about 130. This is a 4-hour chart, just so you know. TrendSpider's getting into the 4-hour charts like I am. I think I've been talking to them too much. Adobe after earnings. It went up. It's up a little bit. It's up 5%. I'm just looking at it on the screen. 5%. So you're going to have a little bit of a gap up here, which will probably bring it down. I wouldn't expect this to go up above the 200-day. I think that 200-day, it's trading at 344. The 200 days at 346. So I don't think that you have a lot to try and get it. But if you do go above that 345, 346 number, I would say this 420, and you close, I should say, if you close above that 200-day, I would say that 420 comes into play. Not within a week, not within a month, not within a quarter, but it would be a long term. Anybody that knows anything about the internet knows that Adobe is kind of like Amazon. They're included in everything. They've got a ton of tentacles. Even DocuSign, when you use DocuSign, it's all Adobe. Whenever I do a PDF, it's all Adobe. They have their Adobe suite. Photographers use it all the time. I use Affinity Photo. So I like Adobe. It's just when you look at Adobe, here's the thing: they're not making money. Well, I'm sorry, they're just too expensive. It's 32. Not that they're not making money. I misspoke. And their earnings are only supposed to grow at like 11%, 13%. Earnings per share the past 5 years, 34%. That's why you got that multiple at 32. So it's still super, super expensive. It's down 42% year to date. They are 44% off their 52-week high. And that's with a PE of 32. So it's just expensive. It's just expensive. Top insider buys. And I'm going to go over the top one. And it's SoFi. The CEO bought $5 million of shares. I'm going to look at insiders. And I don't think you can see this, but it's on the right-hand side. Yeah, Noto Anthony, which is one of the directors, bought $1.5 million. And this is after awards and sales. They've all been selling over the past this year. They bought some, a bunch of people bought some in June. But this is a stock that was a $40 stock, I believe, after its IPO. Maybe it only went up to 28. I'm loading it right now. But it's just, again, with student loan forgiveness, they are going down, down, down. So it's an interesting one. Okay, hold on. I have to plug in my Mac. Oh. Okay. Oh, let's plug it in. Man, it is. And it is like a sauna in here right now. I am dying. Let's see. Hopefully this works. Because last time I don't think that it did. Perfect. Okay. Man, I love Apple. They give you a warning at 10%. That's fantastic. Ooh, DIP. Yeah, James, I'm going to agree with you. Sorry, I got an alert to plug in my Mac because it was so low on battery. Probably because I'm running so much crap on it. But SoFi, I agree. James kind of brought it up on YouTube. It's a money pit. I just don't think that it's a good one. I think these guys who are buying it are probably trying to prop up the stock. It's a good trade. If you wanted to trade this one, I think it's a good trade. The algorithm loses you 46%. Buying and holding loses you 60%. Positions, 27 positions, you win 33% of the time, and your average win is 12%. So it's a good trading stock. I don't think that I'd invest in this long term. It's so far not making money. They are 71% off their 52-week high, which was $16. Year to date, it's down 70%. You can read the articles. The most recent upgrade was Bank of America Securities neutral to buy. It's $9 is their price target. That was in September. In May, Piper Sandler said neutral to overweight, $12. They brought their target down to $10. This one's trading at $4.65. So I agree. It's just not a good one. So I had said that I had a friend in Avaya who's a sales guy, and that we were going to see something December 15th or December 23rd. Rumor and article in Wall Street Journal today said that they are probably going bankrupt. So that's why you're seeing, this is the rumor, and you can clearly see that it's lost all support. So while there was some good money to be made on a trade on this one, with that rumor of a bankruptcy, I wouldn't get into this one. I wanted to bring this up because I know, December 23rd with the earnings, I had brought it up that we might hear something. Hopefully nobody got into this one because that article today, I have not talked to my friend, but that article today was kind of interesting. U.S. Steel, X is the symbol. This one, they announced that there is high demand for steel, and they are up slightly. From a chart perspective, the 200-day is 22. It's trading at 23. This one, you would on the algorithm, and hold on to your belts for this one. The algorithm makes you 61% on this. 61%. Buying and holding makes you 35%. This is a trading stock. You basically have 25 positions. You win 44% of the time with an average win of 16%. And this is on US Steel. If you look at this chart, this is why this stock is a trading stock. Look at the range that you've got. And this is just going back to January here. This big run that you see in January to February, this was when I think the Ukraine war was starting. That's a huge one. Let me see what 75% gain. You almost doubled your money in this just with that one. And that's why, by the way, the algorithm looks so good. It's that one trade. You just got out with a 16% gain. So it's been a good one. And, in this market where you're going down, look at that. It's going to use that 200-day. It's going to fill that gap down to 22, in my belief, even though today's candles should be up. But U.S. Steel, I wanted to bring it up because they reported they'll have better than expected earnings and strong demand for steel. There was one that came up, and I need to Google this, and I did not prior to getting on this. But this is a ProShares Ultra Pro. Here, let's see. ProShares Ultra Pro ETFs. It's probably going to bring up, let me scroll down the ads. There we go. Exchange traded funds. So our ETFs. Thematic, X sector, Bitcoin, interest rate volatility. I'll have to geared levered ETFs. We can go to broad market. This is what you want to do to find ETFs, by the way. Look at the Ultra Pro, Ultra Dow 30, 2 times levered. We can go, let's see. Look at the short, DOG. There's PSQ short. But essentially this SRTY, it's an Ultra Pro short Russell 2000. I thought it was interesting. It showed up with a higher than expected volume for the morning, for the pre-market. And so people are shorting the Russell 2000. Just an interesting note. Thought I'd bring it up. REI. There's some folks in REI. So let's bring up REI. Where are you right now? I think you can hear the cord swing. But REI, $2.35, December 13th. You're at $2.30. I think you've seen this trading range before. The Bollinger Bands, you can clearly see this part, the bottom's coming up. The top part's coming down. It's cinching up. Getting ready for a move. Not sure where it's going to go. But if the September-October move is anything like it was, see how this came down, this came up, and then we just shot up. I'm hoping that that's the right thing because I think, some of you guys are in REI. I'm with you. I'm hoping for that one. Costco. Let's go over Costco. And then I'll go over Target too, since it's both retail. We had a cross up at 488. It got you out the next one. You're at 463 right now. The RSI is at 28. The problem you have with Costco is the cost. Pardon the pun. The PE is 35. You do have a 0.78% dividend. You're 18% down on the year. You're 24% below your 52-week high. If we are heading into a recession, I think that's the problem. The good part of Costco is if in January, they announce some type of membership increase, boom, off to the races. Because remember, this company makes all their money off of membership. They sell at super, super low rates. By the way, I just noticed this. Devon under 60, 59.80. So Devon is under 60. Let's look at Target. Since I think we're at the 140s in Target. You're at 147. Remember, we had this buy-in at 165, and I said, you've got that 200-day kind of providing you support. Had no support, lost all of its support. It covered some of this gap. 167 was where it got to. It's still got 177 in this gap, but you have no support right now. So you're not buying this one. You're going to buy it. The RSI is at 34. I'd say if you're looking to get into this one, buy it next week. I think long-term hold Target. I have no problem getting back into Target. I think it's a well-run company. I think their inventory problems are something of the past. I think they'll have a decent, if not great, holiday season. I think people will spend there. So we wanted to look at AMD for Hung. I asked before on YouTube Live. I said, anybody got anything before I do it? He wanted me to look at AMD. You're out of AMD as far as the algorithm goes. You're going to cover this gap down to 61. It's just going to happen between 61 and 63. You're going to cover that gap. Just going to happen. 100%. You'll hit that one before things happen. Your RSI is at 34. I'd probably buy this one at about 63. I think you'll get it in the next couple of days. Your earnings are coming up on January 31st. If we pull back this volume shelf to a recent, we're going to pull it back to June. You can clearly see this volume shelf down here. That is at 62. It's right at the gap. There's even a bigger shelf down here at 57. So I think if you get a 5 handle on this one, I think you buy it all day long. It is expensive. Let's put it this way. It is expensive. They are having to discount their chips. They overproduce their chips. It's getting expensive. The PE is 40. So the 52-week low is 54. You're 21% above that one. I think that one comes into play again in a bad economy. As far as SOXL, since we're talking about the chips, SOXL and SOXS. SOXL got you out with a slight loss, down to 11. Looks like an 15% loss. And I say slight loss because these are triple levered ETFs in a market that's moving 3% a day. So it is a slight loss. Clearly, SOXL is using that 200-day as its support level, and it lost the support. So SOXS will probably, 33.13 is your buy-in on SOXS, and you're already at 35. So yesterday's buy-in at 33, could probably bought it after hours at 33. It's at 35. So I wouldn't enter into AMD until I saw the SOXL turning around, because that means that the chip sector is doing well and you can buy into AMD. But that's if you're doing a trade. I'd rather play the triple levered ETFs, to be honest. Cooper wants me to look at Meta. This one was up in pre-market. Let me look real quick. Brokerage holdings. Meta is up 1.94% to 118. I kind of said, hey, buy it under 100. I continue to think that this one is coming back down to this gap here between 95 and 101. The longer it stays up here, though, the less likely it is. And the reason why it's starting to come up is they're assuming that Mark's spending less on the metaverse. Spending less is good. So that's why it went down. You've still got a ton of gaps up above this one. This one has just been a nightmare to actually even trade. It hasn't even, justified a trading level. But you've got this gap up here between 244 and 327. I have no doubt in my mind with Facebook buying, $40 billion worth, or $400 billion worth of stock they bought back at 300. Worst investment ever by a company. They believed in themselves way too much. I think they're going to get focused again. I think there's going to be something. And that brings me to the next thing that I posted on Instagram, I believe. WhatsApp is starting groups, kind of like the Facebook group, I think, kind of like Discord. So I'm going to try and get one. What's nice about that is it can't be searched for. So you have to join it from an invitation. So it's kind of a little bit even more private than a private Facebook group. The reason why I like the Facebook group is I believe that I can provide charts and things and people will scroll through it. What's nice about WhatsApp is I can use the status and things of that sort. I did post it on Instagram. I did get some pretty good response from it, so I'll probably start one there when I can figure it out. FYI, boomer alert. So when I can figure it out means I got to actually do some work. But that's it for what I have today. Don't buy anything today. Trade, but don't buy. It's not worth it. Buy Monday. I do think that Monday or Tuesday you're going to see a pretty big bounce back. So your TQQQ, which is under 20, your XPXL, I think you can enter those long ETFs. So 15-minute podcast today. I'll hang out on YouTube. I got to plug in my iPad. Have a great weekend. I will be back on Monday. If you guys have any questions, hit me up on the socials. Remember, TrendSpider sale is going on. If you made it this far, hit the 5 stars on Spotify. If you could, I'd appreciate you going to Apple Podcasts as well. Go down to the library, go to shows, find my show, scroll down, and you can hit 5 stars. Leave me a nice note if you do, like Jackie did. And just, say hi. I got a bunch of people that probably just want to say hi. So say hi. Yeah. Have a great weekend. Enjoy your trading. Okay. Share. Export song to disk. Export. Let's see where Boyle and stuff is. I'm going to head over to Active Trader Pro. Man, I got to tell you guys, it is a fucking sauna in here. I'm going to change my shirt. Whew. Oh. Oh, man. I don't think I'm on camera. But I am also starving. Starving like Marvin. Let me get my iPad plugged in. Oh, you know what? I can plug it directly into the iPad. Boom, boom, boom. We're going to power this up from USB-C. There we go. I got it plugged in now. Should plug. Okay. No. Let me see. I'll say allow. Trust. Hold on. This is the first time I'm doing this. I hope I don't break anything. Yeah, you're right. Cooper, you're my hero. There we go. I'm telling you guys, live with old people for a while. By the way, this is funny too. This is the first time I'm hearing the fans on the MacBook. Oh, that's heaven. Oh, that's heaven. But I'm sure it doesn't sound good. GarageBand, quick GarageBand. Save that podcast. And then I'm closing down notes. And hold on one second. Let me see if I can. Hey, Cooper, I think you'll like the sound of this one better. I just listened to it. I'm going to upload it now. Boom, boom, boom. Dashboard, new episode. Podcast, insert ad. Transitions. Oh, I got a transition called Back in the Saddle. I won't put it in there, though. Okay, so who's got questions for me? Anybody? Let's look at REI on Active Trader Pro. And wow, this fan is loud, by the way. Oh, good, the sound of the fan. Perfect. The fan on the MacBook Pro, by the way, super loud. I wonder if it's because, let me see. That's not super hot. So this is what I used to buffer because the below the MacBook, you just get that bounce whenever I type, which I love this keyboard, by the way. But I guess that's not it. I think it's just because I'm broadcasting and stuff. Amit, I think I owe you the core. I'll do that today. I got to go help my friend, though. Hey, Joe, who the F do you think I am, Nostradamus? Here, I'll post it in the chat. There we go. Let me go to the chat window. There we go. Amit, my apologies, man. I have just been crazy busy with the Miss America pageant. It was not even funny how much I worked. It's bad for your health kind of work because, well, I shouldn't say that. It wasn't physical labor. It's literally standing up. I don't know how these girls do it. Honest to God, kudos to these girls because it's a lot. It's freaking a lot. So, Joe, is 2023 going to be better than 2022? The answer is no. For long-term investors, I don't think my long-term will not see a return to what I was at the start of 2022, probably till 2024, 2025. That's my long-term portfolio. I was. I think you are heading into a range. Here, you know what? For you, Joe, we're going back. Safari. Let's see. S&P 500. We're going to look at the S&P 500, and I'm going to look at a monthly. And let me see if I can bring it back even before. So here's a monthly of the S&P 500. And I know you can't necessarily count the candles, but here is January 2008, okay? February 2008. You were good. And then you just lost all the confirmation that you had. And by September, this is at, say around 1,400 on the S&P. That is 700 within 1, 2, 3, 4, 5, about 6 months. And then you get into 2009 and you see a trading range for most of 2009, but then it takes off. Now, mind you, here's what happened during that time. Housing market stabilized. Interest rates were reduced down to zero, or super, super low. I remember, I think it was 2004, I bought a house in Florida, and my 5/1 ARM, I started out at 6%. And so by 2009, my adjustable rate mortgage, remember, the ARM refers to adjustable rate mortgage. 2009, because I bought in March of 2004, I had to basically I was worried sick. I didn't exactly know what adjustable rate really meant. I had to do a lot of digging, but I was worried it was going to shoot up by March of 2009. And that was where we were here. I didn't have a lot of, I had lost 50% of my money, essentially, because you went from 1,300 down to 700. And so, it got a little scary. And the next, I was with Wells Fargo, the next mortgage statement that I got when it readjusted, it went from about, I think it was almost 6%, 5 point something. I went down to 2%. Huge savings on that one. The property value in my house went from, I think, $400,000 at that point, down to $200,000. The good news about Florida was, they have a homestead law where if you homestead your house, they can't raise it more than 3% per year. It can go down as much as possible, but they can't raise it more than 3% per year. So I was in an adjustable rate with almost no interest, a house where property values had been cut almost in half, so my taxes were super low. I had my comparative living expenses were almost next to nothing. So that's where I was, but my portfolio took a hit by 50%. And it's not that I didn't know how to hedge, didn't know to protect. I was, 2008? I was 38 years old. I had a bunch of money because I had been trading the whole way through. But I had my long-term portfolio. Same as today. I'll tell you right now today. I'm not a guy that hedges. I'm not a money manager. I'm not a guy who buys protection. Like a lot of these guys, there's a lot better money managers than me out there. I'm just a guy that knows how to trade stocks and has been lucky to pick stocks that have been buy to own. I am down 29.46% year to date. That's where I am as of close yesterday. Could I go down another 10, 15, 20%? Yeah. I mean, the market's still expensive. They're talking about bringing down earnings. And when you bring down earnings, that PE, price to earnings, so when the S&P is trading at 17 times the earnings multiple, but it wants to be at 15, and they're going to bring down the earnings, I mean, that's just a recipe for kind of, hey, we're going to be in this trading range. So I do think when you look at this thing, take a look at this long term. Look at that MACD on this monthly. I mean, it's just ugly. Your RSI is at 48. You're in no man's land. So it's not like you're oversold from a monthly perspective. You're basically using the 50-day as a support level. Right here at 3,500, you're at 3,800. So you're using this as a support level. It hasn't even gotten down to the 200-day level. That's where it did in the last time. This is 2008. That's the housing crisis. So it'll get ugly. Here's the lost decade. That goes to 2003. Look at those. I mean, this was a trading range. If you timed it in 2003, you did well, but you lost it all. I mean, it went right back down to where you bought it. So, I can't tell you what next year is going to be looking like, but in my mind, when you see, let's look at the last couple of years, when you see This was 2000. This was COVID, and when you see it break that 50-day, that's a big oh shit. This is 2010 where it was kind of recovering, and it just keeps moving up. But we have been in this bull market, and at some point it comes down. But here's the good news, Joe. The good news is, and remember, I have a 40-40-20 trading portfolio. That's what I want. And that's where I've been for quite a while. The 40-40-20, the 40%, it's just going to sit in there and grow. And so for the last 30 years, 20 years, the last 30 years, I mean, this goes all the way back to, we'll shrink this up. Look. Okay. I was 12 years old, 1982. 108 was where the S&P is at. That's what? 82 is 40 years ago. Look at the bull run we've been on for 40 years. So, yeah. When you only have 2% inflation, but you're growing at this rate, at some point you get a pullback. And, 2008 was a pullback. It doesn't even look like a pullback when you do a monthly chart. Look at 2000. That's a more drastic pullback, long and prolonged from 2000 to 2003. In my mind, this is what we're probably looking at. That type of thing. So if you do, Christian's 100% right. You injected $3 trillion into a $9 trillion system, 30%. And you made it so that rich people like me and banks and everybody could borrow at zero. It's bound to correct. So I do think that this is the beginning of one of these times where we're probably going under the 50-day. This is 2000 to 2003. You went back above the 50-day. This is 2007 to 2000. It took till 2011 to get back above the 50-day. And we haven't even broken the 50-day. But you can see this MACD. This was just an enormous injection of, because it's people, remember, it was the retail trader that moved GameStop. It was the retail trader that took all this stuff. This is what you're seeing. People just poured money into the stock market, and the stocks grew. So that MACD is where you're seeing it. Yeah. Yeah. I agree with you, Joe. I think it was, who was it? Tim Cook, when they asked him, why do you work with Trump? Trump and the Republicans. And he said, because he was standing right side by side with Trump. And he said, if you ask any quarterback in the NFL, would they like to be on the sidelines or would they like to be in the game? They want to be in the game. You don't want to be on the sidelines. I'd rather be in the game. So even though it's going down, historically, I'd rather have my money in here. Joe, get out of that mindset. Out of that mindset, Joe. That's the gambler mindset. Remember, 40% you shouldn't touch, Joe. It's hard. Trading's all of psychology. 100% psychology. speaking of that, let's look at our buddy REI since the market opened. Indices check. Let's see. I am up 0.12. And the NASDAQ is up 0.12. By the way, the VIX just hasn't agreed with this market whatsoever. Yeah, the quantitative tightening, Christian, has not necessarily started yet. And that's the argument that a lot of people are making. So essentially, I think the Fed has like Fed balance. Hold on, let me Google. How big is the Fed balance sheet? Let's see. The value of the balance sheet of the Fed overall since 2007, when it stood at $0.9 trillion. As of December 6, 2022, the Federal Reserve had $8.58 trillion US dollars of assets. So in 2007, when you had the housing crisis, the Fed had $0.9 trillion. So not even $1 trillion worth of balance sheet. Today, it has $9 trillion in balance sheet. When the Federal Reserve starts getting rid of that, basically they're selling assets to the market. And when you sell assets to the market, remember, what makes the markets go down is when there's too many sellers. That's why essentially when Elon starts selling his Tesla stock, it causes the stock to go down. When the Fed starts selling their assets, it's going to cause the market to go down. The interest rates right now are what's killing the market, because all of those announcements and things of inflation and all of the indicators, it's causing people to start selling, which causes the market to go down. When the Fed starts selling their $8.58 trillion worth of assets, that's going to make it go even faster. Supposedly, they had said they were going to start that in September. I don't know if they have done that. But I just Googled it. Let's close that. So here, I'll send you this. I'll put this. Boom, 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 boom. You can see the button hooks in September. Since, August, really. It's come down. Balance sheet has come down. And Joe, don't argue with fuckers on Twitter. You have got to have better things to do in your life, Joe, than argue with people on Twitter. I guarantee you I can find you better things in life to do than argue with people on Twitter. Full episode with for market update 12/16/22. Now let me see. Boy, that REI just doesn't have any freaking doing dishes right now. Good for you, Joe. Who works here, by the way? Tell me what you do for a job. I'm always amazed at you guys. What you guys do for a living. And by the way, if you've made it this far, you really should have sign up for TrendSpider. Let me go to that page. and see how much time is left. Let's see. 2 days. 2 days left. Joe, I love Outback Steakhouse, man, but I never go. I never go. Damn, Justin. Justin, can you fix my Tesla? Can you change the air filter in my Tesla for me? That's the next thing I've got to do. I'm going to take the one that I didn't bring up. I'm going to do this YouTube exclusive. Let me just copy this in. Was no okay, with a look at SPY and where always REITs in the red. Simon Properties down at 116. Let's see, COHR. Oh, I should include, let me see. Sega, IMDb. I didn't do that one. BTU, man. Let's look at BTU. From Instagram, Momo. We're going to look at Netflix, Disney, DRN, UH, Roblox, Boyle. KOLD is the play. Apple support line trend. Really, Cooper? See, I used to trade. I had a 401k with Merrill Lynch, and it was worth, I think, 7 figures by the time I got it transferred out from my job. Maybe it was 6, but it was a good chunk of money, and they wouldn't let me buy ARK funds. And so I called up Merrill Lynch, which was just purchased by Bank of America a few years before. And it was funny because they wouldn't let me trade the ARK funds, and they said they were trying to protect me, and it was too volatile, blah, blah, blah. And so I found a bunch of other ETFs to trade. But what was interesting is when I called and said I couldn't, and I said, I'm moving my money out, I think they gave me $5,000 to keep my money in there. So just an interesting little story. After hours. Oh, I forgot to bring this up. There was an analyst last night. Oh, why didn't I bring this up? There was an analyst last night that said in 2023 he thinks Apple and Tesla will lead. He thinks they've been beaten up too much. So he thinks Apple and Tesla will lead. And I did not bring this up, but I will bring this up right now. VF, SoFi, Avaya, SPY, which is X, KOLD, REI, Costco, Simon Property, Qualcomm, Target, AMD, SOSS, and Meta. And then I'm going to publish now. Yeah, I can always edit it if I need to. Skip, I don't want you to send me. Oh, Kramer's on a rant about Binance. Okay. Any of my listeners buy a Donald Trump trading card? You know, I No, I didn't say I liked SoFi. SoFi's a race to the bottom. Why is Robinhood trending? By the way, we've taken a leg lower. I think the S&P, yeah. NASDAQ lost all. I don't know why I'm tracking the NASDAQ. I was tracking the S&P, but I think I may have effed up my allocation. Ring Energy's on a run. Okay, and I think I'm gonna get done here. I posted the pod. I'll tweet it out later. But remember, if you made it this far, here, let me show you. Just so you're aware, if you made it this far, there is, that's what I was looking at, is AOC wrote back about Elon. Full disclosure, I do not agree with Elon banning reporters because they posted his real-time location. I understand that he feels unsafe with him and his family, but what do you think politicians feel? I mean, you know, Nancy Pelosi's husband got attacked in his own home. So they can't do anything about it, but yeah, he says, Joe. He says. But I like this interaction where Elon says you first. Yeah, this is Peru, and you should follow Peru on Twitter. This is not a quote from Jay Powell, but essentially it's right. We printed too much money, prices went up too quickly, and you couldn't afford stuff. Worry not, we will now reduce your net worth and take away your job. It's essentially what they're doing. But what I wanted to bring up is TrendSpider. It's 60% off. There's a link in the description. In fact, I will tweet out this link. Well, I'll treat it out. Let me see. Linktree. Preview. You get access to my algorithm. Copy. Oh, we'll airdrop it to the MacBook. My fans are going crazy right now. Let's send this link in the chat window. OBS. If you're not signed up for TrendSpider, there's the link to sign up for TrendSpider. I'll give you access to my algorithm. I'll give you access to the, and I don't care, even if you don't sign up for TrendSpider, I've got a portfolio that's set up, and you probably can't see it in the, but I'm going to do much more watch lists, much more scans in the new year, and I'll make your, one of the things I talked to TrendSpider about is getting everybody who listens to the podcast on maybe a YouTube Live with a TrendSpider person to talk about scans, talk about opportunities, talk about how to use their software. But up here in the right-hand corner, I've got Apple, Amazon, Bank of America, Costco, Devon, Google, Goldman Sachs, J&J, Coke, MPLX, Microsoft, Oxy, PanW, Pepsi, Pfizer, QCLN, Qualcomm, Roblox, Shopify, Snowflake, which is, by the way, Snowflake's actually doing pretty fucking good, to be honest with you. Look at, since we got that gap down there at the 120s, 142 was the buy-in. It went all the way up to 161 on that 200 day, and it just lost it. So, but if you have any questions, hit me up on the socials. There's a link tree down below. But TrendSpider, I guarantee you, if you're gonna go monthly, it's $30. If I can't make you $30 in a trade, I mean, put $100 in Boyle, and then trade on just on confirmation. But shit, trade on TQQQ. Let's look at TQQQ on here. These are triple levered ETFs. Look at the ascending triangle on this one, and it broke its support. But it had it. It'll be at 25. I'm telling you, it'll be at 25. You got this gap down here to 18. 18.10. I think that's probably more likely where you're going, but that's not a huge move down. But SQQQ, you've got to buy in at 49.14. So, and you got this gap up here. It's above the 200 day, between 53 and 59. So, and Joe, tell your guy who's buying trading cards at GameStop. Ugh, my cousin does that. I just worry. I think the Trump card sold out in a few hours. Trump was the guy who was bitching that Obama got rich after he was president from making speeches. What do digital trading cards say from an ex-president? It's not like you're donating to his campaign. So, okay. With that, I am out of here. I posted the podcast. I will promote it later. But if you have any questions, hit me up.